'Cause we're off to Button Moon and we follow Mr. Spoon Button Moon. Well, hello. I'm going to do my Saturday update of the 5%ers prop firm. And a warm welcome to one and all. For those of you who have not seen me before, my name is Langers and I am the vocal talent that is the Scruffy Trader. And I do say vocal talent in inverted commas because I do like a sing song. You've got to be happy in your life. If you're not happy, what's the point? You know. So where am I at? What am I doing? And what's all this about? Well, I'm at home today and I'm going to update a prop firm that I've been trading up in front of you guys for the last few weeks. Now, if you're not sure what a prop firm is, it is a company that will put up the money for a trader to go to market and then you split the profit, whatever the ratio is. For the 5%ers, what I'm doing, it is 50-50. So they put the money up, I trade it, and then I get 50% of the profit. Sounds fair? Seems fair to me, especially in the way they conduct business. You see, when I set away on this journey, I had no desire to deal with any prop firm. In fact, I normally just like to trade my own funds and just do my own thing. And the YouTube channel, what you're watching, is essentially a hobby, because when you're sort of in front of the screens all the time, it is a lonely job and you need something to occupy your mind. It's kind of why I have lots of toys around my desk, and everything that's ever sent to me is kind of round here, and it motivates me, but it also gives me peace of mind, because the one thing you shouldn't be doing as a trader is overtrading. So these toys help stop that. While I'm waiting, they occupy me. Because I genuinely think overtrading comes from boredom. You're wanting to physically do something and you need to sort of calm yourself down a little bit. It's kind of why I watch a lot of music videos, etc. Sorry. So as I was saying, I like to trade my own funds and kind of live in my own little world, if you like. And a few of the guys had decided that they wanted to try this prop firm. Now, I wasn't too keen on it, but in the Discord group they were discussing it, one thing and another. And the Discord group is just part of the Scruffy Squad, a group that I run. And I thought the easiest way to sort of help the guys was to have a fully understanding of what it is, but also kind of put my money where my mouth is and trade it. So that's what I've been doing, because the one thing you see with me is whenever I'm trading, it's on the day. It's never a rollback chart or anything like that. I don't believe in it, and I often tell the guys the market that I am trading well in advance of me trading it. You know, so see, I want to trade cable today, I want to trade euro dollar, and this is why I'm going to trade it. And then I show you the results at the end of the night. But they already know the market, they know the direction, and they know roughly what I'm trying to achieve. It's not a signal service. I do not believe in signals. Bear with me, I'll shut that over because Winky's got the old wash machine going. I don't believe in signals at all. I think they are the devil's work and teach you nothing. And it is the #1 rule in that group. You do not give signals and you do not ask for signals. And that way you learn, because I think signals are horrible. Anyway, I digress. Let's have a look and see what the 5%ers are and how far we are on with this. Well, as I was saying, I wasn't a big fan of prop firms because it's almost like working again, and I'm quite happy working for myself. But these guys, they let you do what you want. There is pretty much no restrictions. The one thing they do kind of try and enforce is risk management, which is done by the risk manager program. They do have another one called the aggressive trader, and I'll show you the two in just a second. Basically, the difference is one's for scalping, but it is really aggressive and quite a tough program to follow. I certainly wouldn't fancy trying it. But the risk manager, its restriction was you must have a stop loss in place for every single trade you put on, and which is fine, because you should. You should look at risk management, and the way it's worked. Better switch it over. Reason why I should keep the door open is it gets a bit echoey in my study for some reason, but if I leave the door open, it's fine. Anyway, these are the opportunities. The sort of USP for these is you are live straight away. Now, I was asked if I would look at FTMO, and there's a couple of others, and you've got to jump through hoops before they give you a live account, and you're paying up front for the privilege, which there's nothing wrong with paying for it, because why should they put all the risk on and not have something a little bit in return? So I understand that there's a lot of admin fees, and they give you a lot for your money as well. These guys give you a lot of trading resources in free education. There's a trading room every day for them, and in fact, if you go through it, you'll see that I've been doing some training for them as well. That's how impressed I was with these. I put my name to it, and I hosted their webinars, and I talked to their in-house analysts all the time, and that's because I trust them. But they trust me as well, because as much as it's nice for anybody to come along, they needed to know my track record, so my statements, it's all what I do, and that's why I did the hosting for them. But what is happening here is basically the plans that you have. So if you have limited funds, say you've only got $400 or $500 to trade with, your pot is very small. You've got nowhere to go with it. You could buy into this. Well, there you are. Even if you went in at $450, the instant pot you would have is $10,000 live. So you will go straight into market, and you're making money from day one. The caveat is you have to achieve a profit target of 600 or 6% on that particular pot. It's all roughly the same. It's either 6% or 7% depending on the pot you're in. But we'll use this as an example for now. And once you've generated your $600, and you have roughly 180, which works out about 6 months in which to do it, $100 a month, which is not a lot on a 10,000 balance, they will quadruple that to 40,000. Now it's starting to become life-changing money. And then once you've done 10% of that 40,000, they'll give you 80,000, and they'll keep doing that till it is over $1 million. So you have a low risk barrier to the market, and you've got all of the training behind it, and they give you all the tools you need to succeed. So actually it is good value, which is why I kind of got caught along with it, shall we say. The fund that I'm trading is this one, the 52,000, and they are all the same. They all have the same growth agendas, as you can see, and then your profit target scale goes that. So you're all capped at over $1 million, which is 1.28. It's just the amount of steps you have to take to get there. Obviously, the bigger the pot you start with, the less steps you have to get to the top. But you could start at the bottom and just work your way up. So for me, ticked all my boxes, because I do have good risk management, as much as some people think I don't. I do have a wide stop, but it is managed with Scruffy madness and one thing or another, which makes my risk reward quite good. They give you plenty of time to accomplish what you need to, and then they pay you in the process as well. So, result. So how have I done? Where am I up to and what's going on? Well, if I have a look at sort of my spreadsheet, this is where I'm at the moment. I started this mid-April, and as you can see, I've had a steady growth right through, and I'm currently at 13,827. I am nearly at the end of this. I've done a colossal amount of pips, which is here, and the part you want to pay attention to is this. My average pip size is pretty small because I'm controlling what's going on. If you go in with big position sizes, you can hit your drawdown limit pretty quick. So my game plan was to slow it down and just look for quality over quantity, but also being sensible. And the way of being sensible was just bring the position size right down. Now, before I go into all of these figures, I'll quickly show you, well, in fact, I'll show you this now and then I'll do the other bit last. Basically, this is the month to date. I've had this month 20 clean days. I haven't lost a day in 20 days, and prior to that my best run was 14. So I'm quite happy because I do lose, believe it or not, but I don't lose many days. That's the difference. I'll lose a trade. I'm not bothered about losing a trade because I'll often cut a trade if I think it's wrong for the greater good, and the greater good is saving the day. So 20 days right through. Grown the account this month 4%, which is up here, and you'll see that figure and that figure are different. That's the gross figure. This is the net. In other words, less the swaps, the interest, all of that sort of thing. Okay, I'm holding a 94% win rate on 256 positions, so I'm pretty pleased with that. But what I'm also doing is edging up the bid sizes, which is this here. Now, the way I do my bid sizes, I break them, and break them. So the maximum lean on the account will be positions all added up can be no more than 2167. That's the top side. It doesn't mean to say it's going to get there, but that's the maximum it can go to. That's all of my swing trades, my day trades, everything added together cannot exceed that. I then break that by 5 to give me a market, which is here. So each market will have £4.33. So I can start a market with £4.33, and then it is broken down yet again because you see me open up multiple trades, and I open up about 5 trades at once, sometimes 6, and that breaks down here to 72p, which is basically the 433 divided by 6, which is kind of the most trades I'll put on at an opening start. Now, the way it will work is I will put that on. Once they are relatively risk-free, I may consider looking at a new market. And then I'll put another 433 on in that market. But it's sort of adding on to the other one. And I only open it up when it's kind of not at risk. And because I've only got a little bobble head, and although I drink a lot of coffee, because we all know Scruffy likes the coffee, to keep it lubricated and working, to concentrate on 4 or 5 markets at once is difficult. And that's kind of why I cap it down this way. Okay. And then on the other side is just the targets and how I work things out. And the target was 6 months to achieve 910, which is roughly about £7 a day, 35 a week, 151 a month, which is what worked this section here out. Just worked out roughly where I needed to be. At the start it was 0.6 of the account balance, and then as the account balance grows, the targets grow with it naturally, and as the targets grow, the amount of time it takes me to achieve the goal reduces. So it's all kind of worked out in a sort of maths way. And what you're seeing at the bottom is, it's just how I fill the sheet in. So it's the date, drop in whatever the balance is on the morning, how much of it is going to be at risk. I'm doing like 1/4%, which tells me the monetary value. So that's how much is at risk at any one time. And then when I drop in what the position size is going to be, because these are just guides, they're just maximums. You don't have to go to them, they're just maximum. Drop the position size in there. It works out how far my boundaries are. So as long as my stop loss is placed somewhere between, well, in this case, on the example I've just shown you, 69 pips away from entry, might be at 20, might be at 30, but the maximum is 69. I am at peace with that trade. I know exactly how much it's going to cost me when I press the button. And then when it comes to getting the profit on the other side, then that's something else. I just worry about that secondary. I don't join the two together because I genuinely don't believe in risk reward in the way that most people do. My stop loss is one thing, my profit is something else. And the quality of the trade in the middle between the two is the deciding factor, not, oh, I think that's a risk of 1 and I'm going to get 2. You're setting yourself up for a fall. You just know how much the trade's going to cost, look at the trade, do I think I will get X out the other end with a pretty much better than 85-90% success rate? If the answer is yes, then I'll go for it. If I think it's no, I'll leave it and I'll wait for the next one. Because like trains, there's always another one going to be coming along. And if you try and catch a moving train, rip your arm off. Trading's exactly the same. So that's the kind of scores on the doors. And all this is, it's just how much it costs, how many pips, etc. And then I keep a running total of the day. What the market is, what the quality of the trade is. I only trade A1 and A2 trades. What the difference is, it's just the quality. An A1, which they're not as, they don't come round as often as an A2, because obviously that's every box ticked, is almost a slam dunk. But an A2 is pretty good. Once you start looking at A3 and A4, you're coming into gambling mentality because not all the elements are there. I just leave them alone. And that's what keeps my success rate up. I'm very choosy on what I trade. So that is that. And then if I take this down into my actual stats, this is exactly what I have done. Now it is third party, can't be manipulated in any way, and you've seen it from start to the end. And it hasn't been a one-hit wonder either. It is, if you look at the progressions on this, all I need to do is 9-10, no drawdown, and as you can see, there's the starting point. It's never gone into drawdown at all. It's from the gate, it has an increase. I know exactly what the 3 blips are, which is there and there. Again, that's where the journal comes into it. If you know exactly what's gone wrong, you can sort of prepare for it if you ever see it again. I have actively traded 49 days, and out of those 49 days, I've generated 661 trades. So this ain't no flash in the pan. There's a lot of trades here, and my overall win rate is over 88%. I have won 588 of those trades, lost 68, and the pip count, or the net pip count, which is down here, is 4,714 pips net. The gross, obviously 5584, with a loss of only 870. So my risk rewards are all in check. And that's the thing, I'm paying very close attention to what I'm doing. And the bit that you want to pay attention to, if you ever see anything like this, because it's great having a huge win rate, but you can have one loss that can wipe the lot out, and it skews what's called your profit factor. So keep an eye on your profit factor. Here you need it greater than 1. Mine is 3.9, so I'm getting 3.9 back to every 1 that goes on, sort of thing. And that's it. And as you can see, good equity curve. That was, I was in a 1-to-1. I couldn't get to the screen in time, but my stops were in place. Non-farm payroll day, schoolboy error. I should have known. I should have killed it at 12 o'clock before I went into it. But as with most things, you get into a conversation, and by the time it was over, it was like, bollocks. But that's why you have your stops in place. Protect the account at all costs. Quickly recovered. The next blip, which was here, was the bank holiday. It was a long bank holiday for the UK, and I didn't want to be sitting in an unknown gap over that bank holiday, so I closed all the trades off on the Friday, and sod's law would have it, the markets would have still gone in my favor. However, in my business plan, I do have an exit strategy, and it was ticked, so it was the right thing to do. So yes, give me a bit of a punch in the nose, and if I hadn't have done those 2 errors, I'd have passed the evaluation by now. But such is life. And then the last one up there, I don't know if you saw on the last update, I said I might be taking a little bit of a punch because the euro sold off rapidly from the Fed announcements, and it was affecting some swing trades I had in place. I said these might take a bit of a smack, and they did, but only little, because again the risk was managed, and that's the key element. And if you're taking anything away from this video, it is risk management. This whole process is being built on risk, not on profit. And if you look all the way down here, there you go. My average position size is 20 pence. So I have built up that pot using 20p positions. It has moved up slightly because when I started it was only at 10p. We've now got it up to around 50-60p, but the average is 20. So there you go. Keep your position small, look for the best trade setup, manage your risk, but above all, take your time. I know some of you are going to look at this and go, hold on, take your time. You had 106 months to do this. You've done it in just a month and a half. I haven't done it yet. And it's actually quite a nerve-wracking week because to see the finishing line in front of you when you're exhausted and tired and one thing and another is probably the scariest thing in the world. I'll be singing and dancing when it's done, but you never know. A bad trade could come along and it could set me back. But I'm not bothered because I have got plenty of time to recover. All I need to do is pick the right trade, keep the position in check, and above all, make certain I don't put too much risk on the account. And that's it. So nearly there, guys, nearly there. If you're interested in all of this sort of trading and seeing it directly in front of you, by all means, click the subscribe button. It genuinely helps. And drop your comments below, because I'd be interested in your thoughts on prop firms, etc. And talking of below, if you want to try the 5%ers, there is a link in the description below that will give you 5% off any of the registration fees. It's a gift that the 5%ers gave me for helping them out. And I wanted to give it to you guys. So there you go. Happy days. So trade well, keep your risk managed, but above all, do what you love, and the money will follow. See you all in the next one.